What's good, my fellow D-Gens and Diamond Hands? Welcome to the PhatBear Pod this Wednesday. I'm your host, PB. Let's kick it off with the Big Daddy, Bitcoin. Our boy BTC is slumming it back down to 83.5K after tapping that resistance yesterday. The total market cap is sitting at 2.64 trillion, down 2.4% from yesterday. Trading volume over the last 24 hours? Hovering at 76.3 billion, down only 0.57%. Bitcoin dominance still flexing at 63.1%. And then there's a fear and greed index, chilling at 29, basically the same as yesterday. For alt performance, the top dogs are Ergo, Wallet Connect, Ardor, and Status. The big losers are Pi Network, Colonel Dow, Dog with Hat, and Bonk. But now, let's pivot to some macro news. UK house prices are apparently on a tear, rising 5.4% in 12 months, the fastest clip in over 2 years. Average price? £268,000, or about $350,000 for Americans. That's up from a 4.8% jump in January, and it's got the property market looking like it's sipping Red Bull while the rest of the economy's on decaf. Why the surge? Buyers were apparently sprinting to close deals before a tax break expired. But demand's already cooling off now that the tax incentive's gone poof. Transaction volumes are down 19% year over year, the worst drop since the 2008 financial crisis, minus that COVID hiccup. Prices are holding up mostly because there's a shortage of houses, not because everyone's suddenly flush with cash. Sound familiar? It's like crypto's low liquidity pumps. Same vibe, different asset. Now, let's dive into some crypto news that's on brand for this space. Lucy Powell, big shot UK MP and leader of the House of Commons, gets her X account hijacked to shill a fake crypto called, wait for it, House of Commons Coin, or HCC. Yeah, because nothing screams legit investment like a token named after a government building, right? Hackers took over her verified account and started posting about this community-driven digital currency. Powell's team locked down the account quick, and the House of Commons was like, yeah, no, we don't have a crypto, but nice try. This isn't even the first rodeo. BBC's Laura Quensberg got hit in January with a fake BBC coin, and Ghana's President John Mahama's account was shilling Solana Africa last month. Apparently, phishing emails and leaked passwords are the go-to for these hacks, proving once again that even MPs don't use two-factor authentication. Action Fraud says social media hacks spiked in 2024 with over 35,000 reports. So maybe it's time for a Don't Click That Link seminar in Parliament. Next story. OKX is launching their full trading platform and Web3 wallet in the US, complete with a shiny new headquarters in San Jose, California. They also got a new CEO, Roshan Robert, who's got a resume from Barclays and Morgan Stanley that screams I'm here to make regulators love us. Sounds like a power move, right? Except here's the catch. They're doing this weeks after pleading guilty to running an unlicensed money-transmitting business and coughing up a $505 million settlement to the U.S. Department of Justice. That's $84 million in penalties and $421 million in forfeited fees, mostly from institutional clients. OKX admitted to processing over $5 billion in suspicious transactions and criminal proceeds because they were serving U.S. customers without a proper license. Prosecutors even said OKX employees were coaching users on how to dodge KYC rules with fake info. One employee allegedly told a U.S. client, just lie about where you're from, bro, it's fine. Real professional guys. Last crypto story. Ethena Labs, the team behind the USD synthetic stablecoin, got hit with a €600,000 fine from Germany's BaFin regulator. Their German arm, Ethena GmbH, was playing fast and loose with the EU's micro-regulations. BaFin called out serious deficiencies in USD's compliance, like issues with asset reserves and capital requirements, and even hinted that their staked SUSD token might be an unregistered security. So, Ethena agreed to wind down all operations in Germany, ditch their MiCA license application, and shift everything to their British Virgin Islands entity. Back in March, BaFin told Ethena GmbH to stop minting and redeeming USDE, froze their reserves, shut down their local website, and appointed a special representative to make sure they behaved. Since then, Athena's been running USDE through their BVI entity, and they claim the transition for users was smoother than a freshly printed stablecoin. They're also quick to point out that secondary market trading of USDE is unaffected, so you can still swap your synthetic dollars on DEXs without a hitch. But let's be real. When a regulator drops a hammer this hard, it's not exactly a vote of confidence. Time to switch up to the DeFi news of the day. You remember ZK Sync, right? One of the most farmed Layer 2 on Ethereum back in 24. Turns out, some sneaky cyber sleuth managed to wiggle their way into an admin account on April 15th. And what did they do? They went full goblin mode and minted a whopping $5 million worth of those sweet unclaimed airdrop tokens. That's right, the free money that was just sitting there got yoinked. Now, before you start panicking and checking your own ZK bags, the official word is that this was an isolated incident. Translation, your actual funds are supposedly safe. This joker only managed to mess with the unclaimed goodies. The ZK Sync crew is now playing detective with the SEAL team. They're trying to get those funds back, but last I heard, the hacker's still holding on to most of the loot. Classic. Next story. Jupiter just launched its newest product, Jupiter Pro. So what's their pitch? Speed, simplicity, and enough strategy to make your head spin. But the real kicker? They're bragging about fees that are 10 times lower than those other pro platforms. 10 times. That's like finding a Lambo for the price of a used Honda Civic. If that ain't enough to get your attention, I don't know what is. More cheddar in your pocket. Let's go to the exchange overlords. Sounds like a win to me. Now let's talk toys. Jupiter Pro is loaded up like a whale's wallet. You can stock your favorite tokens with watch lists, smash that by button with their default settings for lightning fast apes, and flip between Sol and USDC like you're choosing your weapon in a boss battle. For the real D-gens out there, they've even got trigger orders via API. That means you can hook this thing up to your trading bots and let them do the heavy lifting while you're busy, actually living life, or maybe just staring at more charts. Last DeFi story. Rushi Manch, Movement co-founder, has reportedly taken a little temporary leave of absence. Sounds kind of SUS, right? Like when your buddy says they're taking a break from crypto after their portfolio got absolutely nuked. Apparently, the Movement Network Foundation was looking into some shady business with the guys who are supposed to be keeping the Move token market balanced. This whole shebang seems to be tied to that Binance kerfuffle from last month. Remember that? Binance, bless their centralized hearts, delisted some unnamed market maker for being naughty with the Move token. Apparently, this market maker pulled a classic crypto move. They allegedly dumped a massive 66 million Move tokens right after launch, and then threw in a few tiny buy orders to make it look legit. Whether Manch's temporary leave is just that or something more, and whether this investigation uncovers more dirt, remains to be seen. The airdrop we're looking at today is Meganet. Meganet wants to be a decentralized network where you can basically rent out your unused internet juice. That bandwidth that's just sitting there doing nothing while you're asleep or doom scrolling on your phone. Yeah, they want you to share that love and get paid for it. Think of it like Airbnb for your internet, except instead of renting out your spare room, you're renting out your spare bytes. Meganet is currently in their incentive testnet phase A. To even get into this testnet phase A, you need a Meganet Passport NFT. The business passport is $2, so no big cost. Afterwards, you can snag these precious points by just staying connected to their network, doing some social media shills in their reward section, and by dragging your friends down the rabbit hole with your referral code. That's all the alpha I have for you guys this episode. PB out.